is a new one. This is actually a worldwide free workshop for awareness and introduction to the stock market. I think we can start right now, and I hope everyone can hear me. If you cannot hear me, you can just drop a message on the chat and I will see. So by the way, my name is Victor Ebois. I am a professional electrical engineer. I am also a practical investor, predominantly in the stock market. I've been in the stock market for a long time. I am the author of a book called Growing Wealth Passively, which I'm going to show you guys. I'm also an author of a workshop and a course called Growing Wealth with Stocks. I also have a website, which is veuniverse.com. The website is an educational platform. So we talk about business, stock market, bonds, real estate, and whatnot. So you might also visit that, my website, which is right here, veuniverse.com, to get more information on the stock market. I always have stock news, like the split, all the new major, Nikola major, I have them all on my website. I would also like to introduce my co-host, which is Dr. V. Dr. Vera is also part of our Growing Wealth education platform. She will be the one coordinating the questions today. But feel free at any time to pop up your question. If you have any question, you can just come in and, pop your question while we are going through the process. But before we get deep into the first section, which is evolution of stocks, I just want to say why we are having this workshop. The main reason we are having this workshop is to create some sort of an awareness for people who are interested or even considering getting into the stock market. For those of you who don't know, the stock market is the most lucrative investment venture in terms of market capitalization. That's why Warren Buffett and Kelvin O'Leary, all they do is the stock market. They buy shares from company that will even permit them to get into the board of directors. As a matter of fact, you see all the companies owned by Berkshire Hathaway, Warren Buffett, he doesn't just buy this company up front. He starts by buying shares. Once he gets a chunk of good amount of stocks, he now owns the company. So that's why this particular education about the stock market is hidden from a particular group of people. When I did my research, I realized that the Black community, especially Africans, were completely out of the stock market pyramid. And that got me amazed. So that's why I brought this mission to spread the knowledge. So if I spread the knowledge to Julius, to Dr. Vera, they will eventually pass it on to their kids, their sons and daughters, and that will get into our system. We're gonna talk about the big deal, why exactly stock, and we'll know why do you see the first world or the developing world, why do they pay so much emphasis on the stock market? So that's what we'll be talking today. So the first topic that I'm going to talk about is the evolution of stocks. The reason I'm talking about the evolution of stocks.
Want to learn about stocks?
Hello?
Vivian invited me to that.
Okay.
Yes, so we'll be talking, I will talk about the evolution of stocks, which will pretty much gives everyone the idea of why the first world is paying so much attention to the stock market. But before we get into that, let me just summarize what exactly is the stock market. The simplest way that I explain the stock market is I compare it to real estate. Everyone knows the real estate. You're buying a house, you're buying a property. That's real estate, which is good. You can see it, it's tangible. The stock market, on the other hand, is you are buying a company. But there's no way you can go to someone that, oh, I want to buy your company. They're going to look at you and laugh, like, you want to buy my company that I spent all this time to create? So what do? You buy a piece of that company. You buy a small share of that company. So piece owner of a company, that is what is called the shares or the stock market. And you make money. When the company makes money, that's how you make money. It is one of the easiest ways to make passive income. It requires you to buy some shares, but it's the easiest way because when you buy, you just relax. All you need is to get the knowledge and how to apply it. And that's what we're going to talk predominantly today. But what is the big deal? The big deal about the stock market is that Western world or the first world used the stock market to promote and fund business and companies. On the contrary, when you look at developing or third world, no disrespect, when you create a company, what happens? The first day you launch your company, you have the taxation office coming up to you, trying to, you spend all this time creating this company, bringing it up into the public, and they're trying to hammer you with taxes, all this, and it makes it impossible for people to even create companies. And come to think about it, companies are what runs the economy of a country. They create jobs, they create employment. That is the most important aspect of every economy. But developing well, they don't promote it at all. If people create companies in the third world, if they want to expand, let's say you are in downtown, you want to expand to west, east, or north, what do? You go to the bank to take a loan. If there is no fund from the bank, you go to friends and neighbors to solicit for money to expand. And what happens? What happens is that if, unfortunately, your company, for some reason, is unsuccessful, the bank will put a lien on your company. They will actually seize your company from you, or your friends and family will be all over your head. You will not even have peace of mind. That's what is happening in the developing world, the third world. Now, let's move it over to the first world, the developed world. When you create a company in the developed world, if you want to fund the company to expand, to move north, east, or west, what do? All you need to do is take the company to the stock exchange. You can go to New York Stock Exchange, NASDAQ, Toronto Stock Exchange, London Stock Exchange, France Stock Exchange. That's all you need to do. When you put your company in, the process is called IPO, Initial Public Offering. It's now public and people start buying shares. So I'm going to buy shares. Dr. Vera will buy shares. Brother Julius will buy shares. Ben will buy shares. We become part owner of that company. When we become part owner of that company, we now receive payment as the owner of the company based on the shares that we bought. We receive dividends. We also receive capital growth. We attend board meeting. You consider that company as part and parcel of you. When you buy shares of Walmart, when you go to Walmart, you want to patronize it. Same thing with Coca-Cola, you want to patronize it because it's your business. It gives you the joy that it is your company. That's what happens in the first world. If your company is unsuccessful in the first year, nobody comes and touch a brick of your company. Nobody, no shareholder will come to Walmart that, oh, why are you not paying me dividend anymore? No, if Walmart is not successful, Walmart can cut down their dividend. If Apple or Coca-Cola, if they are unsuccessful, your capital growth will reduce when you sell the shares. That's the beauty about the first world. It is structured to benefit companies. That's why in some countries, US, Canada, or UK, when you open a company, if you create a company, the government even subsidizes. They pay you money because they know that you will create employment. With all what is going on right now with the health crisis, companies in Canada, US, they are giving bonus. They are giving stimulus to companies that even all you need to do is register a company and they will give you money because they know that the companies are what runs the economy. So now, what's the evolution of the stock market? Way back, the stock market started in the street of New York. That's where the stock market, late 80s, early 90s, that's where the stock market started. People want to buy shares of company, they don't know where to go. You cannot go to Walmart that I want to buy your company. You cannot go to Coca-Cola that I want to buy your company. They have to be a middle person. So at that time, the late 80s and early 90s, there were individuals like you and me moving on Wall Street with briefcase. That's the evolution of the stock market. They were moving with briefcase, so you will meet them if you want to buy Walmart. So you can meet Mr. John that I want to buy Walmart. He will be the middle person to negotiate the deal and you buy Walmart. You go to Miss Mary, she will do the same and you can buy Coca-Cola or any company. But what happens with time? Sometimes Mr. John can be on vacation. So people will be like, okay, if Mr. John is on vacation, I want to buy Walmart. It's impossible. Why don't we have a system that we can automatically buy instead of depending on Mr. John? Now you start having the emergence of banks. So you have banks started selling shares, brokers started selling shares. That's when the first brokerage came in, Vanguard. The first broker to surface is Vanguard, which is created by John Bogle, the guy who wrote this book, Little Common Sense of Investing. Very smart guy. He died last year, may his soul rest in peace, John Bogle. He is the founder of Vanguard. So Vanguard is the first brokerage. After Vanguard, then BlackRock comes in. So BlackRock comes in. So now instead of going to an individual to buy stocks, you go to either your bank or the brokers. They now act as the platform. Now, things started moving. So initially, when they were buying stocks, you could buy just one company. You could buy Walmart, you could buy Coca-Cola, you could buy Johnson & Johnson. People start saying, okay, Mr. Broker, why is it that I can only buy one? What happens if Walmart is not doing well? It means I'm going to lose money. Is it possible that is there a way that I can buy multiple companies? I can buy Walmart, Coca-Cola, Johnson & Johnson, Pfizer, 3M. Is it a way that I can buy it? Okay, so the brokers now, it brought some thinking. So they were like, oh, that's a very smart question. Now becomes diversified portfolio. So when you look at the stock market, it starts with common stock, you have individual stocks and diversified portfolio. So individual stock is easy. Anyone can do that. It's Walmart, Coca-Cola, Johnson & Johnson. Now diversified portfolio is where it becomes a little bit complicated, and that's where a lot of people have challenges. And that's where it's good to pay a lot of emphasis because there's a lot of money when it comes to diversification. That's one of the risk management when it comes to the stock market. So with diversified portfolio, once diversified portfolio started, that was in the late 60s. early 60s, late 60s, that's when diversified portfolio came in. The first category of diversified portfolio is mutual funds. So the banks and brokers, they jump into it, mutual fund. Now, what is mutual fund? Mutual fund is simply a bucket or pool of stocks, bucket or pool of individual stocks. So you look at a bucket, now you have Coca-Cola, Walmart, Pepsi-Cola, Gatorade, they are all in a bucket. What happened? What is the advantage? If one stock is going down, it's supplemented by another stock going up. So it was such a nice thing and people love it. It was a big deal. People were like, oh, now I can have, there is no way I can lose money because if one company is going down, it's supplemented by another company going up. But the catch about the mutual fund was that it's managed by a financial planner.
Victor, just a second there. I see a hand that has been up for a while now. If we could just get everyone to keep their comments and their questions at the end of his presentation, you will be able to ask your questions, just to let you know that your hand is not being ignored. Please keep your questions at the end. You'll be able to ask the questions. Thank you.
Okay, thank you very much, Dr. V. Yes, so we talked about mutual funds. So mutual fund is now managed by the bank. So a financial planner with the bank will manage your mutual fund for a fee. And the fee ranges from 0, sometimes it even goes up to 5%. So you pay them, they manage it for you. Sometimes people might think 3% or 5% is little. But what happened? It compounds with time. If you are investing $100, 5% of $100 is so little. If you are investing 20,000, 30,000, if you are someone like Warren Buffett who is investing 400 million, do you know what is 3% of 400 million? It's a lot of money. So people start complaining, investors started complaining that no, this is way too much, way too much. So what happened? The same guy who started Vanguard, John Bogle, the reason why he started Vanguard was to put money into the pocket of investors. But what happened with the emergency of mutual fund, it defeats the purpose of putting money into the pocket of investors. So what happened? John Bogle decided to create what is called index fund. Index fund is not managed by anybody. It simply mirrors or mimics a market index. Example of market index are S&P 500, Russell 3000, the Dow Jones Industrial. If you go to France, you have CAC 40. You go to London, you have 4100. So you buy a package that simply mirrors, it follows, so it tracks. So anything that you have is like a mirror. When you look yourself in the mirror, you see your face. So you buy a portfolio that mirrors the market index. So everybody was so happy, investors were happy. There was even rioting by some banks and financial institutions in New York against index fund. Everybody was telling John Bogle it's not gonna work, it's not gonna work. But what happened? Till today, index fund is what is winning the game when it comes to diversified portfolio. So index fund and mutual fund are traded just once a day. That's the down. It's not like individual stock where you can buy and sell every day. You trade it just once a day. So now people start complaining again. Again, it's just the evolution. People start complaining again that why do I have to sell or buy a share just once a day? I want to do day trading. Like day trading is one of the strategies of buying and selling stocks. So financial planners, business mogul, they started brainstorming again that these people are right. There's no way you can just buy and sell just once a day. The latest investment fund when it comes to the stock market is the exchange traded funds. Now they came up with ETF. What is the advantage of ETF? ETF is also a diversified portfolio, which means when you look at it, it have lots of company, when one goes down, it's supplemented by another goes up. With ETF, you can trade it numerous times a day. So it's not like mutual fund or index fund. ETF is divided into two sectors. You can choose the one which is, it can go to a sector ETF, like the tech industry or mining. You can also go to index ETF, which is what I always recommend people to do. Index ETF, what happens is that it follows the
Don't need a
market,
pen.
just like the S&P 500 or whatnot, and you pay little or no commission fee. So that's pretty much the evolution of the stock market. So you have common stocks, individual stocks, diversified portfolio, mutual fund, index fund, exchange traded funds. And the stock market first started with human beings as brokers. It moves to bank and brokers, and now it's still on banks and brokers. And one thing you have to take into consideration, when you buy stocks through a platform, a trading platform, the activities or the exchange takes place in the stock exchange. That's why I mentioned about New York Stock Exchange, NASDAQ, Toronto Stock Exchange, London Stock Exchange. So that's the evolution when it comes to the stock market. So now I will call on Dr. V to start with the first question.
Hello, everyone. Thank you, Victor, for giving me the opportunity to ask a few questions today. I hope everyone can hear me. We're just going to ask that if you are not talking, if you can mute your microphone, we would appreciate that. I see a few people who have not muted. Huguet and Redme, please, if you could mute your mics, that would be highly appreciated. Thank you. So, Mr. Victor, thank you so much for that presentation. That was awesome. In a few minutes, we got a hint of what the stock market is all about and the history. So that's really, really good. And for everybody who is here today, if you're here, it's because you're interested in the stock market, you're interested in making money, you're interested in laying down in bed and let a machine burn your money. So that's why we're here. If you haven't had a chance to have a copy of this book, all what Victor was talking about, chapter 4 of this book would lead you there. And you would have the opportunity today to listen to him talk, answer some questions. You would have the opportunity to ask some questions and have your questions answered. But what is even more important is that if you want to take this one step further, you can be part of his course where he's going to have one-on-one interaction with you to help you make money through the stock market. So Victor, let's get this in. Are you ready for the questions?
I'm ready, but please take it easy on me.
It's pretty gonna be easy, really, really easy, because all we're trying to do here is to learn. We're trying to interact with each other. Everybody here is here to learn, and we're here to support each other. Thank you so much for what you're doing in our community. We really, really do appreciate it. For one, I got interested in the stock market because of Victor. I'm not gonna hide that. I am so thankful because I got to know Victor through this opportunity. I got to know the stock market through Victor, and I am just like elated with his the knowledge that Victor has. It's not just the knowledge, you can see it in real time. If you watch his videos, you have seen how much money he can make in a day. You saw one of his videos where he was talking about how much he made on Nikola, the stock Nikola, and the ticker symbol, I think it's NK, what is it, Victor?
NKLA.
Yeah, so we are seeing proof. We know that it works. If he's not just telling us to go and get our money lost, he's telling us strategies, how to, be analytic, look into the companies and be able to make money. So that brings us to the very first question, Victor. How does an average person who doesn't know anything about the stock market, who is interested in making money, how can that person start investing in the stock market? What does it take?
Okay, yeah, that's a very, very interesting question. As a matter of fact, I think that's most of the question that that normally comes up when it comes to the stock market. Again, the stock market is the most lucrative. When I say most lucrative, if I always use the word most lucrative because the richest man in the world, that's what he does primarily. That's what Warren Buffett does. That's what Kevin O'Leary does as well. But for you to get into the stock market, there are some steps to follow, and I'm going to list that down for you guys. The first point is knowledge is power. Knowledge is power when it comes to the stock market. I always tell people the stock market, if you've done mathematics, the stock market is like the calculus of mathematics. It needs you to think a little bit. It's like when you do politics, if you're a politician, you want to run for office, you need to know a little bit about economics. You need to know a little bit about geography. You need to know about history. You need to know about finance. You need to know about the medical field because those are the questions that people will ask you every day. With the stock market, simple. You need to know a little bit about every sector. If you are in the pharmaceutical or if you are in the medical field, you need to know a little bit about automobile. Right now, electric vehicles are trending. You need to have an idea. Like myself, I am an electrical engineer. I know now about pharmaceutical. I have stocks of Johnson & Johnson, Pfizer, Apple. So you need to use your mindset to diversify. That's why I said unlock your mindset. Knowledge is power. So if you educate yourself in the stock market, then the stock market will be a money-making machine. As a matter of fact, I call it a ritual because the money you see in the stock market comes in a way that you're even surprised. You see how people back home go to double money? You don't even have to go there. The stock market will double the money for you. Now, how does it work? If you have no knowledge about the stock market, please don't get into the stock market. The stock market is like a war front. If you go to the war without ammunition, gun, what happens? Your enemy will crush you. If you go to the stock market with no knowledge, they will crush you. Again, if you have half education of the stock market, you also have to be careful because that's a recipe of challenge or disaster. I have some friends who have watched my video on introduction to stock. It's everywhere. When they see me talk about the ticker symbol of Walmart, WMT, Apple, AAPL, Amazon, AMZN, they just rush and buy. They download Robinhood, Questrade, they download it, they rush and buy. What happens? They will make $500, $1,000. Sometimes you even make up to $5,000. And they don't have too much knowledge. It's just that they know the symbol and they open the account. What happens after a while? When you start, it looks like the stock market knows when a huge chunk of money is coming in. When you put in 10,000, 20,000, 30,000, that's when the stock market sucks it up.
That's true.
I don't know, for some reason, it waits until, if you come with no education, it waits until you start investing a lot, it sucks it up. And why does it suck it up? Because people buy shares of company that they don't even evaluate. You have to evaluate a company. That's what I teach in my course. You have to check their PE ratio. What is their net worth, their assets, their liabilities? Those are the things you take into consideration to never lose money in the stock market. I have never lost $1 in the stock market. But does it mean I don't have rates? I have some shares that are underperforming, but I don't sell. Another secret of the stock market is you don't lose money until you sell. So sometimes changes might happen in a company and your stocks underperform, just hold it. Don't sell it. So the first point is knowledge is very important. Do yourself a favor and educate yourself before investing in the stock market. Have you ever been in a situation where you play a lottery and you lose money? and you are embarrassed to even tell people, that's what will happen to you when you invest in the stock market with no education. Because all the calls that I'm getting, oh, Victor, I lost 10,000, I lost 15,000. I'm like, oh, okay. So what's your level in the stock market? They're like, oh no, my sister just told me to download Robinhood. Oh, my friend just told me. I'm like, okay, sorry, there's no way I can help you because you don't have the knowledge. Stock market is not just about punching ticker symbol and buying. It's you forecast and you use your intuition to move on with the stock market. So that's point number one. Point number two, getting into the stock market, fees do matter, fees. Remember I talked about mutual fund, 3%, 5%. Sometimes people think it's small, but it compounds with time. When you're getting into the stock market, look a broker or a bank that charge little or no fees. As a matter of fact, right now, there is no commission fee. There are a lot of brokerage out there, no commission fee, even apps. So do yourself a favor, investigate which broker you want to use. First, the broker have to be international. International, which means anywhere you are, you can go in. You are in Europe, Africa, America, Canada, you can, with your laptop or your smartphone, trade. There are some platforms, I don't want to call name, there are some platforms where you cannot trade out of the country, which is embarrassing. So ask your broker, is it international? When they say yes, check number one. Do you have commission fees? If they say yes, you say how much? If they say 10%, 5%, no. You want zero commission at this point in time. So fees do matter. That's point number two. Point number three, which is general for every investment venture. Get emergency fund somewhere before investing in the stock market. When you go through my course or my workshop, you will know why I say that. It's for taxes purposes. You have to keep your money in for maybe a year to move your bracket to the rich man's bracket where you don't pay taxes. That's why rich people don't pay tax. It comes with investment, how long you hold the money in. So get some money somewhere. Any money that you invest in the stock market, plan not to take it out in 2 months or 3 months. Just leave it in there. As a matter of fact, the money you put in the stock market, consider it as your business capital. Some people don't do tangible business anymore. Do you think now with my knowledge in the stock market, I will open a store, a grocery store to sell things? No, I will not. I will use my capital in the stock market. It's my business. That's what is running. So I use it. I keep buying and selling to increase my portfolio. So get emergency fund, very important. Point number 4, start small. I call it baby steps. There was one lady who got introduced into the stock market and she just started investing 5,000, 10,000. It is advisable to start small. The stock market is a practical investment. You don't bring knowledge from the stock market by just reading books or novels. It's not economic or accounting. You have to apply it. When you buy shares, you see the way the shares perform within a month or two. And then you buy another share, you see the performance, you know the one that will fluctuate, the one that fluctuates a lot. You also have the ones that are stable, like the blue chip companies. Then you have the volatile ones, like all the companies now, like Nikola, Hyliion, where you can make millions within a couple of days. But it is advisable that anything you have in, start small. Don't put too much money. The reason is because when you start small, if anything happens, you lose small. If you start big, if something wrong happens, you lose big. So that's pretty much why you have to start small, baby steps. And then last but not the least is something called dollar cost averaging. Dollar cost averaging is something that I use all the time in the stock market. Now, what does it mean? That simply means instead of you going into your savings account that you've saved maybe $1,000 or $3,000, all you can do is from your checking account or whatever account you have, you can set a system to be putting in maybe $20 or $25 or $30 every month. It leaves from your account straight to your platform. Sometimes it even comes in without the money, you don't see it. Sometimes your pay comes in and the money moves straight to your account, and it's like you are investing free money. Because money that doesn't stay long time on your savings account, you don't see it. So it's not even counted. So now it moves into your brokerage account. They call it dollar cost averaging. Very important concept. Anything you have, you can put $5 every 2 weeks or $1 or $20, $30. Dollar cost averaging is very, very important when it comes to the stock market. And then I'm also going to say this. Anytime people think about the stock market, what comes up in their mind? Warren Buffett, make money, lose money. Making money is the positive approach, which is good. All the other courses that I've taken is about, oh, I'm going to make money in the stock market. But little do they mention about, I'm going to lose money on the stock market. So that's why my course and my workshop, I concentrate not just on the positive approach of making money, I also do the defensive approach on how to avoid losing money. Because if you make money and you lose money, doesn't that cancel out?
Yes.
Won't you want to make all the money and don't lose money?
Sure.
That's where I specialize on the defensive approach. I teaches you how not to lose money or how to mitigate losing money in the stock market. So those are my 5 points for someone who wants to start investing in the stock market as an ordinary person. Over to you, Dr. Ovi.
Thank you very much, Victor. Strong, strong 5 bullet points right there. My takeaway from that is do your research, be educated before getting in. And once you're in, try not to lose money. And you have to have an emergency fund. You have to have an emergency fund just so that you don't come back to get money from your stock if it's not doing well. When your shares are not doing well with the volatility in the market right now, when things are going wrong, like Victor just said, he doesn't lose money in the market. You look at his portfolio, it looks red at times, but he's not going to touch it until it gets back green. So that's what he's saying. Somebody asked a question in the chat section, if you can expatiate on emergency fund. If the person is clarified now, you can just raise your hand. If not, Victor is still going to talk a bit about it. If you're okay, just raise your hand and give a thumbs up if you have the clarification now. If you need Victor to do that again, he will do that. Thumbs up. Or just unmute yourself and tell us if you're okay with the response. Okay, thumbs up. Okay, question number 2, thumbs up. Thank you.
Celsius.
Go ahead. Go ahead. Somebody was about to ask a question. Go ahead. Okay. If we don't get any question, I saw the thumbs up, which means the emergency fund question has been answered. The second thing is, on the media now, everywhere, when it comes to the stock market, we hear about Tesla 541. We hear about Apple 441, and there's so much hype about this. So if someone wants to benefit from the Tesla 541 and the Apple 441, 441 split, how do they go about that?
Okay, that's a very good point. It is such an amazing time in the stock market. Can you imagine 2 of the largest blue chips company in the world splitting their shares? Tesla, which is supposed to be 2,000, on Friday, how much did it close? 2,200 and change. It's now splitting, taking the price that the market ended August 21st, which was $2,049, let's say $2,050. They will now split it into 5. So 1 share come tomorrow for Tesla will be 410. Again, Apple also one of the biggest blue chip companies. When I say blue chip companies, for those of you who don't know what blue chip companies are companies that have already proven their worth. They are companies with millions and millions of dollars of net worth. Net worth is the asset of a company minus the liability. So anytime you invest in a blue chip company, you don't have to do too much assignment. Why? Because the company is already valuable. They call it value investing. But let's talk about what does it mean, a split, when it comes to the stock market. A split, it doesn't change the value of the company. Neither does it change the value of your stocks. What it does is that it increases your number of shares, and most important, because it brings down the price, it now brings it to the normal people like me and you. A lot of people were not able to buy Tesla when it was 2049. A lot of people were not able to buy Apple at 452. I did a workshop last week and people were so amazed. People are ready. The next set of millionaires are coming up. Let me tell you something. There are guys who have money in suitcase waiting to buy Tesla. Why? Because Tesla gonna bounce back. Before December, Tesla will probably bounce back to about $800. So people look at it and they consider that this might be a money doubling machine. So this is such a huge. I mean, I was talking to one of my friends who could never afford to have Tesla. Do you know what it is to own Tesla in your portfolio? People envy you when they see Tesla in your portfolio. They envy you. When you own Tesla in your portfolio, they know that you are rich. When Tesla was selling for $2,000, one of your shares is $2,000. You can just sell that and buy your flight to anywhere you want. You know what I mean? But now they are giving you and me the opportunity to buy Tesla for $410. The same, they are giving you the opportunity to buy Apple for between $112 to $120. Nothing can beat that. So you come tomorrow, you own your Apple, you own your Tesla. These companies will move irrespective of anybody not moving. These are blue chip companies, they will move. Right. Blue chip companies are the only companies which are COVID-19 free. They are not affected. You can see all of them. Amazon, where is Amazon? It's a blue chip. $3,000. Where is Google? So these companies are not affected. They did not cause the crisis that is going on. The crisis have nothing to do with them. The crisis did not touch their liabilities or assets. So they're gonna bounce back where they belong. That is an opportunity for people to double their money. So people should consider. Don't say I didn't tell you. Those two companies, if you are looking for money for Christmas, then say, Victor have given me an opportunity to make money for Christmas.
That's a good one.
So that's exactly what is happening with the split. It is an opportunity for the middle class.
What happened?
One person told me that maybe this is a sign that God want to give back to the middle class. God is giving back to the middle class. That is what is happening. So that's the response when it comes to the split.
Thank you so much, Victor. I'm just going to encourage everyone again, if you're not talking, please just mute your mic, just so that we don't get interruptions when the speaker is carrying on. Thank you, Victor. But I'm just going to ask one more question with respect to the split. You've said with so much enthusiasm that Tesla is going to bounce back by December. Do you have inside information, or is it just based on your research? I know you've encouraged us today to go do the research. Is there another reason other than what you just told us, that it has not been affected by this crisis? Is there something else you know that we don't know?
Okay, let me tell you this. When it comes to companies, you do your analysis. Tesla, when you look at Tesla, you look at one of the ways to evaluate a company is the financial statement, which I always teach that in my course or in my workshop. In the financial statement of every company, you have the balance sheet and the income statement and the cash flow. Have you seen Tesla's cash flow? Tesla's cash flow is breaking down with all the subsidiaries. Subsidiaries are companies that report to Tesla. When you look at Tesla, you only think about an electric vehicle manufacturers. One of our brothers asked that question, but why is Tesla so lucrative? Tesla got a lot of subsidiaries, companies that report to them. On the other hand, companies that they own. Tesla owns Solar City. Solar City is the largest solar developer installer services in the US. Tesla also owns Maxwell Technology. Maxwell Technology is in batteries, combustion, converters. Those who are electrical know a DC to DC converter and AC to DC converter. So Tesla already have a company that is doing their battery, that is doing their chopping of electricity. So they own that. Tesla also owns Tesla factories where they manufacture battery cells and hydrogen cells and all whatnot. Tesla also owns SpaceX. They are getting into aviation. Don't be surprised if you see a Tesla airline moving from Toronto to New York. Tesla are also into aviation. So the answer to that question is that check the balance sheet of Tesla. And the balance sheet tells you, when you look at their net worth, it tells you what will become. Because cash flow, you look at companies that report to the companies like their subsidiary, that's where you forecast the cash flow. There is a little bit of probability in the stock market. That's why you see the people who do well in the stock market, they have a little bit of mathematically approach. The guy who gives Warren Buffett all his information when to buy stock is Charlie Munger. He's very good in mathematics. So you put some forecast and probability and you know that the company will make it either ways. Tesla cannot stay at 410. It is too low for Tesla. As a matter of fact, a lady called Cathy Wood, who is a top investor in the US, she predicted that Tesla is worth what? $6,000 or $7,000? Who follow Cathy Wood? You can say what?
I do. I follow Cathy a little bit.
Okay, good. So she said Tesla is worth $6,000 to $7,000. So that's it. I don't have to tell you that I belong to any inside group, which as a matter of fact, I belong to some groups that we get leads on when stocks are moving. But the one in the case of Tesla, financial statement says it all.
Amazing, amazing. I'm still on this matter. You're giving us an opportunity to have Christmas gifts, right? Yeah. And we want to get on board. We've heard about your course on the stock market. We've heard about your workshops. How can we get on it? How much does it cost?
Oh, okay. Yeah, that's good. That's a very, very good point. So, Dr. Vera, first I will say this. The reason I started talking about, I have a YouTube channel for more than a year. A lot of Black Americans, Nigerians, and South Africans my subscribers are mostly Black American, Nigerian. I don't even have up to 50 Cameroon subscribers, but I have almost 2,500 subscribers. So there's not even 500 Cameroonians, the country that I came from. That's very funny. Yeah, that's so funny.
We're getting on board. We're getting on board. We're getting on board.
We're going to make up that number. We're going to make up the number.
Okay, good. So I make up this course so affordable. So because I want to pass this message to the Black community and especially Africans, I make it so affordable for any normal person to get hold of. When I started my first workshop, someone told me that, oh, it's so cheap. The last one I did was 1,500. I'm like, oh, really? I'm like, okay. No, then don't say it, just leave it, let it be this way. We are doing it so we can get everyone. So I break my courses or coaching into different sectors to fit everybody. First, I start with coaching. Some people just want one session coaching. I charge $100 for one session coaching. Then I have 3 coaching if you want 3 coaching sessions. You can see that from my website, or if you send me a WhatsApp message, I will send you the link. For 3 sessions, I charge $250. Then I have a course. I have a course which is online.
Where's the other course?
The course will give you all the information you need.
Everyone, please, everyone, could you mute your mic? When Victor is talking, please, could you mute your mic? Thank you.
So I have a course. The course is just $250. And then I have the powerhouse, which is the workshop. The workshop is the powerhouse. Why I call it a powerhouse is because you get the live information right from me. And with the workshop, it comes with a 1-month phone support. So after taking the workshop, you still have 1 month period to ask me any question that you have. The workshop costs $500 and it's also online. As a matter of fact, I'm just gonna share how you can get to those, you can get to the course or the workshop. I will share my screen. So let me share my screen. Okay, yeah, that's good.
Okay, and everybody is muted.
Yeah, thank you very much. So now this is my screen. If you come up to my website is www.veuniverse.com. It is such an amazing site. You have a lot of information. You have small business, you have real estate, you have the stock market education, and then you have my course. So when you come here to my course, you just scroll down, get the course. When you click on it, it takes you straight to the course. And from the course, you have all the lectures. It gives you a preview before you even start taking the course. So section 1, introduction to stock market. Why do companies sell stock? And the way I do it is I make it so simple that you can easily go into any section. Section 2, I also break it down. Where do people buy stocks? Right up to, so you can easily go through from my website. You can either do it from the website, or you can, if you're someone who'd like to go to YouTube to see videos, you can go over to my YouTube channel, which is victor.ve-universe. And please, when you go in, try to subscribe, it supports the channel. And any of my videos, if you go underneath, you will be able to, in the description.
Online. Go to Wix.com today and do it like this guy.
So if you go to any of it, if you scroll down to the description, there is always a link to the course. So you can also get it from there. So it's pretty easy. Or better still, you can see I have my phone number on Zoom, 416-684-8543. You can just send me a WhatsApp. I'm pretty much on, most of the people here on the same groups in WhatsApp. So you can get to WhatsApp and send me a message. I will send you a link to the course. So those are pretty straightforward on how to get it. Again, you have the coaching session, you have the course, you have the workshop. So you cut your coat according to your size. And what I want to say is that it moves from level to level. If you are a beginner, a newbie with no prior knowledge to the stock market, I recommend you go with the workshop. Why? because you will have hands-on practical experience. With the workshop, along midway, you will already open an account. As a matter of fact, people who completed my first workshop, Sister Vivian can testify, she already started making money. So she paid for that $500 in between because she opened an account and she bought stocks that were moving. So for newbies, go with the course. If you're an entry level and you think you can go through a course and understand the material, you can get my course and you can get a 1 coaching or 3 coaching. If you're an intermediate level where you are knowledgeable about the stock market or you know something about the stock market, you just want to take advantage of my defensive approach, then you can get the course and then just get a 1 session. With that 1 session, I will explain to you the defensive approach of the stock market, how you can get in and never lose money. Because when you come to think about it, why people are scared because they are scared to lose money. Once we have that one-on-one and I tell you all the loopholes, we talk about the risk management, we talk about the common mistakes. Once you have those information, that will give you the power to avoid or mitigate losing money. Another thing about the stock market is that it also depends on who introduced you to the stock market. Most people who lose money in the stock market is because they are introduced by the wrong person. Your niece, your uncle, someone just said, download Robinhood and start buying stocks. When you lose money, you now call them, they say, oh, I don't know much about it. I just did the same thing you do. So that's why in my course, I give what is called an elephant skin. Even your stock is not performing, I tell you not to sell. Why? Because we already evaluated that company and the company is doing good. If something happened, there are a lot of factors that affect the stock market. Trade wars between US and China affects the market. Economy affects the market. Politics. If Donald Trump says something today and the dollar goes down, it affects the market. So those are the things that I inflict into people, that don't be scared. Hold your stock. So long as you are not selling, you will not lose money. So I am using the defensive approach to attack the stock market, which is very, very important. So again, cost, you take the course, $250, the workshop, $500, 1 coaching, $100, and 3 coaching, $250. So that's the answer to your question, Dr. V. Oh, Dr. V, you are on mute.
Thank you, Victor. I mute everyone, but I'm not sure what is happening because I look at it and I hear the sound and I look and I see people are unmuted. I've muted it through the settings, but it still does that. I'm not sure why. Okay, so thank you. I was saying thank you so much. Thank you for explaining that. If anyone is unclear about how to get on these courses and the workshops, Victor has his phone number on the Zoom ID right there. So you can call him directly and he would give you access to these courses once you're able to make your payment. Thank you, Victor.
Yeah. And I also want to bring this to your attention. There are only 2 reasons why people lose money in the stock market. Just 2. One of the reasons is because, again, no education or half education, which I said is a recipe of disaster. Do yourself a favor, don't get in if you are not knowledgeable. The other point is, if people, for some reason, have financial difficulties, which sometimes is difficult to handle, that's why I said get emergency fund. If you have emergency fund for 6 months, there is no way you can go into your stock platform. Because what happened, I've seen people invest money in their stock platform. When they get financial problem, their stock is underperforming, they still sell because they need that money. They have serious matter. When you pull at that time, what happened? You are losing. So you are selling at a loss. So those are two things to take into consideration.
Thank you, Victor. You're reiterating what you had explained to us before, and I think that's really important because going into the market, we don't want to lose money. So it's absolutely necessary to reiterate the point. And you've also used the opportunity to talk about the emergency fund. You know, we need to have that emergency fund somewhere. So when things are going bad, we can go to that fund instead of getting into our portfolio. Yourself, and let's hear from the guru. We have a comment in the chat section. This is from Grandma Sally. Hi, Victor. Good afternoon. This is Grandma Sally. This is my first time here. I don't understand. I will call you later. Yes, Grandma, he has his number on the screen. You can call him anytime Victor is gonna pick up that phone and walk you through this because he is ready to help our community start letting that machine to grind the money. Thank you everyone. Victor, do you want to say something else? Do you want to give people a few more minutes if they want to ask some more questions?
Quickly, we've heard Mr. Victor saying a lot and talking so much about, you know, he's repeatedly say Warren Buffett, Warren Buffett. Of course, the two rules, rule number one, never lose money. And rule number two, remembering rule number one, never to lose money. So it's so true. If you can listen to Mr. Victor, follow him, you'll never lose money in stock market. Thank you. I just want to add that.
All right,
Awesome.
thank you very much, Sister Vivian. Thank you very much. Yes, so let's give it another 5, maximum 10 minutes. If not, then we'll call it a day. But again, this is a very, very lucrative opportunity, the stock market. So if you can start small, it doesn't matter. You can start with $1, £1, $2, £2. There are even stocks. As a matter of fact, there are stocks that are selling under $1.
True.
And every field that you are, any field that you are, you can buy stocks. If you are in the pharmaceutical, you will buy Johnson & Johnson. If you are in IT, you will buy Apple. So there are all these different categories.
Okay, we have Ben, go ahead and ask a question.
Okay, this is Ben. I just have 2 comments to make. One of them is that if there was ever a time that the stock market is good to invest, it is now during the COVID. So for those who are thinking, this is the best time to get into the stock market. The other comment that I have to make is that I have researched a lot of different, those that who say they are gurus in the stock market, and their mentorship program runs thousands of dollars. The cheapest that I've seen is $4,000 for mentorship. So I have Victor's book. I've bought his material. I'm just here to testify that, you know, I have really benefited much from that without spending up to $1,000. So those are my comments.
Okay, thanks a lot. Thanks a lot, Ben, for such a good compliment and testimony. Yeah, I've been.
If you don't have a question, but you just have a testimony, or you just have something positive or a comment you just want to make about the stock market and your experience or the knowledge you've garnered today from this conversation, please do take a moment and just share. We are here to learn from each other. We are here to support each other. Go ahead.
Yes, so thanks, Dr. V, for even bringing that up. We also have a WhatsApp group called Growing Wealth Education, where we share our information, not only on the stock market, but business and investing tips. So if you want to join the group, just send me an email. I will add you to the group. That's a very
Hey, this is Hannah. I wrote a question on the chat asking how we can get your book. Like, how can we get your book?
Oh, sorry about that, Hannah. Sorry we missed that. Victor, go ahead.
Okay, let me just show you. I even have hard copies here. Yeah, that's a good question, Sister Hannah. I'm gonna mail you a hard copy. Don't worry, I'll mail you a hard copy. So normally you can get it from Amazon. You can get it from Amazon, or I can send you a hard copy. I do have hard copies, so I'll just mail it to you.
Okay, thank you.
You're welcome.
Okay, there's another.
Okay, so Dr. V, we have 5 more minutes to go. Any more questions?
I like how you keep saying 5 more minutes, Brother Victor. Can you please?
That tells us this man right here is interested in the stock market and is interested in giving us the information. Because I tell you what, when it comes to question and answer, nobody likes the hot seat, but he is inviting it. So you have to understand that he is the guru.
He is. Can you please throw more light on the dollar cost average? I think I came in when you were talking about it. I think I'm interested in doing that.
Okay, that's a good point. Dollar cost averaging is a system where you just transfer a little bit of money, you transfer money into your stock brokerage account at different intervals. So you can set it bi-weekly or monthly. So instead of you taking the $1,000 that you struggle to save in your savings account and put it on your stock brokerage account, which sometimes if it doesn't perform well, you might feel the heat. All you can do is from your savings account, arrange it so you have a pre-deposit to your stock brokerage account. So every 2 weeks, $50. Every 2 weeks, $50. When your salary comes into your account and it remits that money into your platform, you don't even feel it that much. So the money gets there, then you use the money to buy stocks. So instead of taking a chunk, 2,000, 4,000, 5,000, do what is called dollar cost averaging, which is the interval transfer of money to your brokerage account. That's the easiest way people invest in the stock market without feeling the heat as if you are using chunk of your money. So did you get that, Sister Anna?
Yes, I did. My next question is, do you arrange it with your employer or with your bank?
Oh no, it's something you can do with your bank. You just pay with your bank. It's a pre-authorized. You know how you pay your bills with pre-authorized? You just set it interval, yeah.
Okay, thank you.
You are welcome. I do that with some of my bills. Like I just put it that every 15, pay this company this amount of money. So now, because the brokerage account is also linked to your bank account, you do the same dollar cost averaging.
Okay, thank you.
Okay, so if you guys have no question, I will conclude this workshop for today. Again, I want to thank you all for your participation, your interest, and your contribution. It means a lot to me. It means my mission to spread the message about the stock market is working. If I have a workshop and I have 25 to 30 people, I think that's a good thing. So the takeaway today is that the stock market is the most lucrative investment venture. You can invest as little as $1, $2, $5. It is the most liquid investment venture you can ever see in your life. When you buy a house, what happened? For you to pull your money, if no one is willing to buy the house, how will you have your money back? With the stock market, even if you put 100,000, you can sell the stock today and get back all the money. So it's very liquid. You can even use your smartphone to trade. There are people who open their brokerage with apps. So you don't need to have a huge platform to start trading in the stock market. But the final conclusion is, do yourself a favor and get educated so you avoid that embarrassing call you make to someone saying, I lose $5,000 or I lose $10,000. Because those calls, we don't need those calls. We don't need the call that I lose money in the stock market. I like to listen to the call or testimony that I made money from the stock market. So that's my take for today.
Thank you. Thank you so much, Victor. Thank you, everyone who has joined in today. Thank you for your time. Sorry about all the glitches and me not being able to mute everyone because of my phone. I'm not sure what was happening here. We're sorry about that. Thank you. Thank you. Thank you.
Can I say something?
Sure, go ahead.
This is Sangun Jabba in Houston. I want to testify of what Victor has done and how those of us who are entering into the stock market for the first time, we can exploit and really succeed. Victor has a video, Stock Market for Beginners. If you are in this forum or platform for tonight and afternoon or night and you have not watched it, I will place bet that when you go back, try and rewatch it again. If you have watched it, rewatch it. If you have not watched it, try and do so. Secondly, I got into Victor, though we grew up together, after I attended a workshop on stock market and real estate. I paid $5,000. First paid $2,000 and later $3,000. But just because it was being organized by people of the Caucasian skin, I thought I would learn something very concrete in it. Unfortunately, nothing came from it. I lost that money. So what he is doing is sometimes it becomes difficult for us to accept things which are so cheap, but it is unique, it is wonderful, it is a golden opportunity. I know many of us must have spoken to friends in Cameroon and in other places about this initiative. Please, take it, make use of it, don't let it slip by. Some people made $7,000 just between Wednesday, in the last 3 weeks of the Tesla split. Some people made $5,000. Some made even $20,000. Just imagine if such amount of money entered our Cameroonian community from many people in different, sectors. Stock market is not something that if you get the information, you conserve. There are billions of companies in the world. Right. Even if 1 million people enter the stock market today, they all will still make it. 10 million people, they all will still make it. So please encourage your friends, let them meet Victor and make use of this opportunity. Thank you.
Okay, that's a very, very good point from Sangun Jabba. Thank you very much for that point. You see how some people get into an investment venture and they are scared that, oh, when other people come in, maybe I will not be able to make the amount of money that I'm making.
Right.
The stock market is like an elephant. It will feed the whole world. There are companies everywhere in the world. You cannot buy all the companies. I can buy 5 companies, Sangun Jabba. So there is room for everybody. If somebody makes 20,000 today, I will not envy the person because tomorrow I might make mine based on the company that I choose. So the stock market, consider it as an elephant skin. You will make money, I will make money, Sister Hannah will make money, Sister Vivian will make money. That's why I'm not holding the knowledge, because if the knowledge goes out, the better. I hate seeing people being broke, to be honest with you. I hate when people say they are broke, really. I don't like seeing people being broke. This is the opportunity for people to make cash for themselves. So stock market is like an elephant skin. It's for everybody, room for everybody.
So thank you so much, our brother. He said, take this information and run with it. Don't let it sleep. Let's all take this information back to our communities. Let's all grow together. Let's all become rich. White people are getting rich because of this. What else? Why can't we take advantage of this? If we have our brother Victor who is bringing this information, it's free today. We didn't pay anything for this. But what we can do to give back to Victor, who has given us this opportunity, is that those who have not been able to purchase his book, get material for his course, attend his workshops that are paid, this is the opportunity for you to give back. You're not just giving back, but you're also using that opportunity to learn more so you don't fall the victim in the stock market. You don't want to regret your first steps. You want to start strong, stay strong, and roll strong. Because with Victor, from all the testimonies that we are getting today, we know that he is somebody who is going to take you on this journey and you will enjoy the ride. So thank you so much, Victor, for giving up yourself, giving your knowledge, spreading it out to all of us free of charge. We love free things, but we appreciate you for doing that. And we are going to do our best to spread the information out there, because we know that the more you make, the better content you're going to provide to us and the more content you're going to put out for all of us. So everyone who is here, let's do something special for Victor. Just unmute yourself and let's give him a round of applause. Please unmute yourself and let's give Victor a big, big, big round of applause, everyone.
Thank you, Victor. Thank you. Thank you so much.
Thank you, guys. I really appreciate that. Thank you very much.
Thank you, everyone.
Okay, thank you.
Final word of bye. Just a goodbye word for everyone.
Thank you very much, and we'll see you next time.
Thank you.
Thank you.
Have a good evening, everyone.
Have a good evening.
Bye.
Bye.
Bye-bye.